Hi, thank you for joining us today on Realty Check. I'm your host, Trish Williams, and we are still in this financing series. We're in part 7 this morning, and today we're going to be talking about purchasing investment properties using financing. So we have a special guest with us today, Arturo Pradera of Altera Home Loans. And Arturo is going to give us his expert advice and walk us through how you can use financing to purchase an investment property, which is pretty exciting. Yeah. So Arturo, tell us a little bit about yourself.
Well, I've been in the mortgage business now 13 plus years. Been in Las Vegas 30-some years, so I know the valley pretty well. I've been with Arturo Home Loans, where I'm at now. It'll be 10 years in a couple weeks. So
oh, wow.
I'm excited. That's a long time for anybody to be at one company. So
absolutely.
But I'm very happy there. So we do a good amount of business, and I won't say I'm an expert, but I'm pretty close, I'd say.
Oh, you are an expert. I've worked with you. You're definitely an expert.
Yeah.
You know what you're doing. You know your stuff, and you're very precise in everything. So I appreciate that.
Thank you.
So I only have experts on the show. I just want to say that out there. Only experts.
I was trying to be modest.
So good. Thank you for joining us today. So right now, real estate is the number one thing to invest in, right?
Yes.
It's the number one money maker for people these days. And not only investing in real estate as your primary residence and owning a home can build you wealth, of course, for the future, but there's a lot of money to be made, a lot of wealth to be made by owning a home as an investment property where you're getting rent every month and making passive income off real estate. And I don't think it's common knowledge out there that you can use financing to do this. A lot of people think that if you need to buy an investment property, you have to have the cash to do so. And there are options to finance investment properties.
Absolutely, yes.
Yes, and that's what we're going to talk about today. So using financing to purchase an investment property, what does it generally take to qualify? I know there's a lot of layers to qualification, of course, but generally, who is this product really the best for?
Well, I'd say it's for anybody, honestly. Like anybody can buy a property. Ironically, we're having this conversation today because this last year, obviously real estate's been hot, but I've had a lot of people, just regular people, buying investment properties. I have a guy right now he has a couple properties, but now he's buying 7 fourplexes.
Oh my goodness!
All at once, After one property he sold in California and made good money, and now he's going to invest it all here on these properties. I have another lady that's all she does. She doesn't have a regular income as far as work, but she's bought 3 or 4 properties recently, investment properties.
Right.
And these are just regular, everyday people, so you don't have to be a savvy investor. Obviously, you should study up on it and know what you're doing a little bit, but that's where we can help you as well.
Right, absolutely, and that's something that you will guide and help and tell them a little bit about how it works as they're getting started, correct?
Right, absolutely, yes.
Yeah, and that's really a good resource. And that is, what you said exactly, I think is very important for people to know. You don't have to have a history in this. You don't have to have, you don't have to be a real estate investor or have a background in it. An average person, and I see it all the time, average everyday people that are making really good, solid income just off of owning investment properties.
Yeah, like I said, this the client I have now, the lady, that's all she does. Has like 5 properties now and buying more, and that's all. That's the income that we're using to qualify her for the other properties.
Really?
So imagine that. Yeah, she has no actual income that we used for a job or anything like that for her qualifications to buy these properties.
Wow,
it's
that's
all
amazing.
From the rentals, yeah.
And passive income, let me tell you, I call it mailbox money because it's like just money that you can earn in your sleep. So it's
no matter what,
a beautiful thing. No, it's a beautiful thing. It's a beautiful thing, yeah.
I think no matter what kind of work you do, you should look at different streams of income, and passive income is what I'm referring to. That's something that doesn't take a lot of your time, but just has money coming in, because you never know what could happen with a job or an industry in itself. So when you have real estate being one of the best ones, when you have that passive income, a rental property that's just making money, paying for itself, it doesn't get better than that, especially in the long run.
Yep, and that's why I think this topic is so important, is to open people's eyes to the potential that you could have with that, because so many people, you work a 9 to 5, you go to work every day, you work a 9 to 5, you wait for retirement, and that's great. but there's so much more that can be done, and it doesn't take a special, a special talent or skill to be able to do it. You can really, anybody can make it happen.
Yeah.
Yeah,
Absolutely.
and that's what's just amazing about it. So is there specific criteria for the property itself when you're purchasing an income property or an income producing property? Are there certain properties that would or would not qualify, or does any property type really qualify for this?
Well, as far as residential, it's anywhere from 1 to 4 units. So you have the single family, you have a multifamily, which is 2 to 4 units. Anything above that is going to be considered commercial, like apartments, 5, 6, 7 units and above. So I think the only properties that wouldn't qualify necessarily are manufactured homes for investment. You can buy that as a primary, but not as an investment. And obviously any property that's run down or doesn't qualify for financing, period. 'Cause
Yeah. So those homes that are like, just
when I say run down, I mean in really bad shape, because
Yeah.
no house has to be perfect to buy it. So
it has to be in livable condition, have an
by
AC.
a normal human being.
Yeah, by a normal human being. What some people
I've seen
call
properties
livable.
and the clients want it so bad, they're like, but I'll live here. And I'm thinking that's not reasonable.
Yeah, stove, it needs a stove, it needs floors, it needs windows, doors.
Yeah. Unbroken windows. Yeah.
Yeah, unbroken windows, hot water,
Yeah.
AC,
Yeah. Water
all
heater.
those things, the basic things that would make a home livable.
Yeah.
So that's,
and a good landlord, not a slumlord.
yeah, absolutely.
Yeah.
And that is important because you're looking to purchase an investment.
Yeah.
You want something that's going to be basically solid. You don't want to, purchase an investment that's going to be a money pit, because
Right.
then you're not going to make a lot of money off of it.
Yeah, well, those are things you have to consider when you buy it, because it could be something like, hey, you need to remodel it maybe, bring it up to par a little bit, and you're able to, but it is financeable, you're able to finance it, and then you put some money into it. But that's all the things you have to consider as far as your return on investment, because when you buy it, you're going to put some money down, typically 20%. Or more, and then you are maybe going to put some money, you're going to probably in this market pay closing costs, and you're going to maybe have to fix it up a little bit. So all the things to consider as far as the ROI on it, the cap rate. So you're typically shooting for a 5 to 6% cap rate for the year in this
Okay.
market, which what that means is, I'm going to give you an example. These aren't exact numbers, so I'm just kind of, but it's just for an
Ballpark.
example,
Yeah.
ballpark. So let's just say you buy a $300,000 property and you put 20% down, which is $60,000.
Okay.
I'm just going to go with that number, not including anything you have to pay in closing costs or to fix up the property. But now let's just say the mortgage is $1,500 and you're renting it for $1,800.
Okay. It's
And as we all
$300 a
know,
month
you're making
income.
$300 a month. That's $3,600 a year.
That's
You
good.
divide that by the $60,000 you invested. That's a 6% cap rate. So that's where you want to be on your return on investment. It's $300. And some people may take that $300 and keep it. So they might reinvest it back in the property, so it pays itself faster.
Yeah.
But that's where you want to shoot for in that range.
And that makes such perfect sense. If you had $60,000, for instance, in a bank account, just a traditional savings account in the
Not
bank
gonna
account,
make
how
any
much
rent.
money are you making?
I don't keep too much money in bank like that, so I don't know. I think it's
I
like
think
2%,
like $5 a year.
1% or
Yeah,
something. It's very, very little.
Yeah,
you know?
you're not making a lot.
And-
You're not
and-
making a lot on interest. You're not making a lot of money. You put that $60,000 into real estate and you can make $300 a month income. I mean, that is going to pay you way more than any interest on any savings
Yeah.
account will pay you.
And that cap rate I mentioned doesn't even include the appreciation on the property.
Yes.
You have to learn, that's more your area, but property appreciates,
Yes.
and it goes down too. Obviously, real estate is cyclical. I always look at investment properties as a buy and hold. You're not looking
Yeah.
necessarily to buy it and sell it right away, unless the market appreciates crazily.
Yeah.
A little bit like now.
A little bit like now, yeah.
But even then, it may not be worth it. It may not be enough money. If you look at it more in the long run, and it's paying for itself. So now you're building equity. You're lowering the balance on it. Maybe eventually it pays itself off. Now you have a free and clear property just bringing in income. That one day
Absolutely.
you could sell for your retirement or invest in something else. I mean,
Yeah.
real estate is always a good buy. I wouldn't say always, but it's one of the best investments you can make. Many millionaires have been made in real estate. We know that.
Absolutely. And I agree with that 100%. I've had clients that had investment properties for the long term. And absolutely, you're right. Markets they go up and down.
Uh-huh.
That is what it is. Happens in the stock market, happens in real estate, happens in everything. But it's the long-term investment. You ride it out.
Absolutely.
At the time when it goes down, I mean, I seen the people that all, dumped their properties and ran from them when the market crashed, and now they're looking back like, gosh, I wish I would have kept that home, because it did come back, and I believe it will always come back. You always need somewhere to live.
Over time, obviously we've only lived a certain lifespan, but over time, if you look back, it's happened, over and over. The cycles up and down. So.
Yeah. You write it out. You
write
buy real estate with the intention of it being a long-term investment, and in the long term, it's going to pay off. And in the long term, you're also going to, not only have you made that income monthly, yearly, over the time that you've had it, but the appreciation. At the time that you sell it, you get paid again. So it's definitely worth it, worth it in the end. And
Right.
and properties are a lot of times are appreciating, right now.
Yeah.
The cost of living is also going up. I mean, my grandparents had a home that was, $50,000 when they bought it, and that home now, they don't own it anymore, but that home now is worth $800,000. So it's, long term, real estate does appreciate because cost of living appreciates.
Yeah, well, and real estate usually stays ahead of inflation as well.
Yes.
Yeah.
Yes, absolutely. So you talked a little bit about down payment. How much down payment would somebody need to plan on having to be able to purchase an investment property?
So on a single family, technically you can do 15% down on an investment property.
Would that have high rates?
Most people, it's going to have a higher rate though.
Yeah.
You're financing more risk for the bank, so higher rate. You're going to have some mortgage insurance, and I think it kind of defeats the purpose, because if you're trying to keep the payment lower so you can rent it out and make a little profit, when you have now you're financing more, your rate's higher, you have mortgage insurance. It might not be a lot because it's only 5% over 80 loan to value, but you are going to have mortgage insurance. So now your payment's going to be a little bit higher than what it could be, and you're trying to rent it. You might not be making the return on investment you're hoping for. So 20% is usually the norm for investment property.
Okay.
Yeah.
And then, of course, the more you put down, the better package you get, the better rate, the better deal.
Typically, you get, at 20%, you have no mortgage insurance. And then, if you put more down, you're financing less, first of all, and you're typically going to get a better rate. Like maybe recently I had a lady, again, another lady who just out of nowhere started buying bought two investment properties with me. Never bought an investment property before. Own a home. But so it's interesting how people now, with the rates low and Vegas growing, and she lives in California, so she knows that Vegas is hot,
Yeah.
But she went from putting down 20, and she decided, she got a little more money from something, and she goes, I want to put another 5% down. Her rate dropped a half a point. Okay. And I'm not going to say that's going to happen with everybody, but it's just an example. So and that just helps with lowering that payment. Like I said, that's the key.
And that's the intention. You're buying a property to make, income off of. So you want to have the best case scenario as possible. And if you have the ability to put down the extra money.
And one thing people should know as well, like the lady I have that has 4 or 5 properties now, investment properties, is that you're qualifying with the expected rent for that property. Or the actual rent. So what happens is when you buy an investment property, the appraiser does a couple additional reports. One is if there's a tenant in there now, what it's renting for now, and what's the actual that you could get for that property based on market rents. So let's just say it right now it's renting for $1,600, but it could rent for $1,900.
Okay.
So you keep that in mind, because once your lease is up with the current tenant, if there's a current tenant, but you're actually using that money to qualify. A percentage of that, 75% of that, you would actually use to qualify. So it's not like you have to qualify with your income only. You know what I mean?
Okay, so you don't have to be, basically, if you own a home right now and you're wanting to buy an investment property, you don't have to typically be able to qualify for two full mortgages.
No.
You just have to be able to qualify for 25% of that payment on the investment property.
Yeah. So I've had situations, where the 75% of the of the rent didn't actually cover the mortgage of the property they're buying, because it's only 75%. It's not the full 100% we're using. But and then with the person's other income, they qualified for the property. So
So their income can play into that as well. And another thing that I'm sure that people out there are probably thinking of, so there's a lot of people out there, probably more than not, that don't have, $60,000 right now in their pocket or in their account, but they might own homes that have $60,000 worth of equity in their homes. Are they able to do a refinance, pull
Yeah.
out that equity and use that equity to purchase an
Yes,
investment
absolutely.
property?
I got a call from a lady yesterday who just actually finished paying off her home. She bought the home with me a few years ago, and she put as much money as she could. And she's like, now I want to buy another property. Can I pull that money out? And I'm like, yeah, if you want to, you'll have another mortgage, but
Yeah.
it'll be small because you're only pulling out. And she actually, it was 60,000 that she said. So
How funny.
yeah, so yeah, you can, and obviously that's just a number we're using, but
Yeah.
you can do that if you have enough equity, which people have bought at a certain time years ago now have a lot of equity in their home. You're seeing that a
Absolutely.
lot. That's why a lot of people are in a good position to sell right now as well, because the market's up. So,
Yeah.
but yeah, if you obviously there's percentages. You can't cash out the full amount unless you sell the property. The max on a cash out is 80% of the loan to value. So if your home's worth 300, you can finance 240. That pays off the mortgage you have now. Let's just say your mortgage is 120. Some closing costs. The rest of that 240 is your money to do with what you like.
Oh,
In
so
this
there's no
case, you could turn
penalties
around and invest it on a investment property.
Right, so there's no penalties on that, and if somebody wanted to do that, they could contact you and you'd be able to handle the whole process from the refi to the purchase.
Yes, absolutely. Yeah.
Yeah.
I've done quite a bit of that, especially lately. Like I said, people in this last year, I've been doing this over 13 and a half years. This last year, I've had the most people buy as investments ever.
Yeah.
In all the time I've been doing this. It's very interesting.
Yeah, well, it is interesting. It's a great idea. People are seeing the market is continuing to raise, and not only that, it's so astounding that it raised during a pandemic. When you think that when you expected everything to crash, it just kept going up, which is a really good indicator of how stable I feel like our market is going to stay for a while.
I think there's a lot of factors in that, obviously, why the markets are appreciating. But if you look back before the pandemic, Vegas was growing. A lot of things were happening here. We have a couple of professional teams. We have casinos being built, the Sphere, homes are being built. There's a lot going on here. It can slow down with the pandemic, but it's not going to go away. It's still going to happen. So once we start opening up and getting back to normal, which we already have, Vegas is growing, and it's getting a much more attractive city for people to come to live in.
Absolutely, and it is. It's the place to be. If you ever have a chance to look at there's a county website, I think it's called Las Vegas 2050, which is, I know it sounds like a long time from now, but it's really not. It's really not that far away. But the plans for this city, there is so much in the works and so many things going on, so many areas that were just kind of, I guess, left alone and abandoned that they have big plans for.
Oh, yeah.
Things are going to be changing. We're going to see a lot of changes there, and it's a lot of exciting things that's going to bring in more business, new people. I mean, the older parts of Vegas are starting to be renovated. They're all turning around. There's a lot happening here. I think It's the place to be. We don't have a beach, but we have a lake. So
Not the same, Trish. I miss the beach. I'm a beach boy.
It's not the same. I was joking yesterday. We're probably an earthquake away from a beach, but
That's funny.
That's
Bye,
eerie.
Sorry,
just
California.
joking, not funny. Sorry,
No, but
California.
Vegas, I've been here a long time, 31 years now, and it got to a point. It got a little tiring for me, just being here a long time, and like I said, I miss the beach. So I kind of was already thinking about moving. But in the last few years, I've changed my perception of it, because Vegas is actually becoming a very cool city.
Yeah, it's not just this little desert with casinos. It's changing a lot, and it is. Things are changing.
And everybody's
here.
welcome.
Yeah.
Okay. I know a lot of people don't want Californians coming here for some reason, but
They're all.
you're all more than welcome. I was born in California.
There's so many Californians here right now. I mean, it's just Californians probably don't want Vegas people here anymore, because that's.
Wow, we're outnumbered.
Yeah, we're definitely getting outnumbered. We are definitely getting outnumbered. So, how's income verified for the property qualification? So, the income on the property, I think you said that they verify the rents. They're going to check the rental comps. They're going to make sure that this property can produce the amount of monthly income to cover the payment.
Yeah, the appraiser, like I said, when we do an appraisal on a investment property, there's a couple additional reports that are required. One of them being a rental survey. So they're gonna look into what the tenants that are, and I say tenants because in case it's a fourplex maybe, or a duplex, but even a single family, what if there's a tenant in place right now, what they're paying. But they're also going to look at what the market rents are, what you could actually be getting for that property.
Right.
So they're going to look at both of those. Yeah.
Right. And, on the show, I've talked a lot about like fourplexes and different areas and different things, but duplexes is something that I feel like is so overlooked. It's cash on the
I think
table.
so. I think, more people go for the fourplexes than the duplexes.
Yeah, but the duplexes are super affordable. I mean, they're older. They're in older parts of town and everything like that. They're super affordable. And then you have two, side by side income producing properties. It's definitely something that I think is a good purchase as well.
And something that people can consider when it comes to duplexes, fourplexes, is you can actually buy that as a primary residence. You're going to be living in one and rent the other units. And get those three, like in a fourplex, get those three rents and actually qualify with those three other rents.
Yeah.
So that helps a lot, and you're basically living for free and making money off the property.
Absolutely.
So that's something people are able to do as well.
Yep, absolutely. And I don't know if this is in your realm or my realm. I know it's definitely in my realm, but I'm going to ask you as well. Is there a certain amount of properties that you can manage on your own before you're required to hire a property manager?
No, there isn't.
Okay.
But I will say this, as somebody that owns, this is just from my personal experience, I'll say that first, but I owned a couple of rental properties, one being a fourplex, and the biggest mistake I did was to not hire a management company.
Right.
And especially me, because I'm like the softest landlord. Like, oh, you don't have my rent this month? It's okay. And I just, but the process of actually, when you have a management company, you're like the third party. They take care of everything, especially the calls for something that broke. They take care of all that, So it's worth the percentage they charge for the management. And then just the emotion's not there. So if they have to evict someone, they do the process, which is not the most simplest process. But again, I say this from experience. I ended up selling my properties because I just wasn't managing them well, to be honestly. It was too time consuming, and I was too, like I said, I was too nice with people that couldn't pay sometimes.
And sometimes that you get taken advantage of for being too nice. They know when they know they call.
But I will, right now I just have my home, but I do plan on investing again in more rental properties with the management company, no question.
Yeah.
So it's just my personal recommendation, I'll say that.
Yeah, most definitely.
But there is no requirement as to to finance more properties, you don't have to have a management company. We're not going to require you to do that.
Okay, perfect. And I know, sometimes people will, buy a income producing property and say, oh, my brother or my sister, somebody wants to live in there. And I tell people that I hate to be the bad guy with it, but I say, that might be a red flag, because if it ever comes a time where they can't pay, it's going to put you in a predicament.
Nepotism. It's just like anything, like hiring someone to work for you, and then they don't decide they don't want to show up to work some days.
Yeah,
it's not much different, so it's not, you got to make sure that they're going to pay.
Yeah, you got to keep business and personal a little separated, even, in this case where you go into purchasing investment properties. So can you use this loan type to do flips? Like if you wanted to purchase it, renovate it, flip it, sell it next month, is this the type of loan you would use for that?
No, not with a regular mortgage bank, because we're in the business of financing, and obviously that's how the banks make money, financing the loan and over the payments and the interest. So there are companies out there that do offer financing for flips, but they're getting a lot of their money up front. That way, when you do flip it, they still made their money. But banks make their money in the long run typically, so they're not looking to finance somebody that's going to flip it right away.
Right. So I assume with this type of loan, just like with any type of loan, mortgage financing, you really want to work with the buyers and the clients that have the intent of holding it for minimum 6 months. But really, if you're looking for an investment property, you want to plan on holding it a lot longer than that.
Yeah, I'm not sure why anybody would want to, it'd have to be some crazy appreciation all of a sudden for anybody to even want to sell it in that quick a time. Because when they bought the property, they had to pay closing costs or things they invested in. So unless they're going to make that and more, it wouldn't make a lot more. I don't think it would make sense. To me, real estate, especially investment, is buy and hold. If you're in the business of flipping, buying homes, finding properties out there, distressed properties that need work, and you can fix them up and sell them, that's different. But again, that's not the type of financing a mortgage bank does.
Yeah, that would be like non-QM, like something outside the box, those, and rates get crazy and all the other stuff, but those are
Yeah.
outside of the box
Yeah.
financing types. Yeah, which we'll talk
Yeah.
about that. We're going to talk about that on the show actually next week, is all of those things that don't qualify for traditional financing.
Yes.
So that will be one thing. Is there a limit to how many income producing properties you can own with loans attached to them?
Yeah, typically it's with loans attached. Typically it's 10 properties financed, but you can exceed that. There are some requirements, and I don't remember off the top of my head, obviously, but you can exceed the 10 financed properties with certain requirements.
And you don't have to be a millionaire, or make $1 million at your
No.
regular job or regular income to be able to do this. Because the properties themselves help qualify for the further properties,
Right.
correct?
Yeah, like I've mentioned with my clients recently. The one gentleman buying 7 fourplexes right now, he owns 2 properties already. He's looking to buy more, and he has decent. He's a self-employed. He has decent income, but he's really qualifying with all the rents.
Right.
Yeah.
So I'm also going to address the elephant in the room, because there's probably things that people are thinking of. Yeah,
Where's it?
yeah, he's right
Looking.
there. So there's probably things that people are thinking of out there right now. We have this moratorium going on, right? So there are tenants out there that are not paying rent. Is there, or are you aware of like relief that investors are having with that? Is that something that basically they just have to have 6 months reserves to cover in instances of cases like that? How, as a mortgage lender, are you guys addressing this situation on the qualification, or is it something that's even being addressed?
Anytime you buy an investment property, they require you to have reserves. The reserve amount depends on how many properties you own already.
Okay.
It's typically a percentage, or it's like 6 months reserves. What reserves are? It means like if the mortgage payment's $1,500 and you need 6 months reserves, you need 6 times that. So what is that? $9,000, I think. You have to have that in your bank. After the money you're going to spend on buying the property, you still have to have that money sitting in the bank. It's not going to be used for anything, but it's just a cushion that you're showing the bank.
They don't want you spending every dollar you have on an investment property.
Yeah,
We're not
especially
gambling.
because there's vacancy percentages. You might have the property vacant for a while. There might be some stuff that needs to be fixed and things like that. So yeah, you're gonna want reserves in case something happens. As far as the rental moratorium, I don't know much about it, honestly, but I would assume that when people are buying these properties, that that's all being disclosed up front. That the research is being done by their agents as far as that property is receiving its rent rolls. There you go.
Yeah, rent rolls, and that is as an agent, when I'm working with people that are buying investment properties, and there was even one that was self-managed we were working with recently. They kept no rent records, and we required deposit statements. We're like, the tenants are paying you somehow. We have to be able to verify this.
Yeah.
So it's definitely doing that due diligence is very important, because the situation that we're in, there are people out there that are paying rent, and you don't want to end up purchasing a property that already has a tenant in it that the tenant's not paying, and now someone else's problem you just inherited.
Yeah,
So-
and the way you said that makes me think of something also, and that's not something we look at the rent rolls. Like I said, they do verify what the rent's supposedly, the lease is for and what's actual, but you can actually buy a property that's vacant as well.
Yes.
Because again, part of that survey that the appraiser does is how much the property can rent for. And that's what we're going to use that percentage, that 75% of that. So the property doesn't have to be rented for you to be able to buy it.
Okay, perfect.
Yeah.
So
it can be vacant.
you don't have to like rent it out while you're in escrow or anything like
No.
that. Do you have a certain amount of time before you need to get a renter in there?
Well, that's not something we're going to know about, honestly.
Okay.
Yeah.
Okay, and that's
Because it's going to be after the fact.
Yeah.
Typically, you're not going to rent a property out until after you bought it. You're
Yeah.
not going to put somebody, you can set it up,
Yeah.
but you're not going to put them in there. You can't put them in there. So
Absolutely.
after the fact. But that's, once we close, we close. We're not going to verify whether you rented it out or not. But
Okay.
that has to do with the reserves as well, because maybe it takes a while to rent it.
yeah.
You know what I mean? So that's why they require the reserves on investment properties.
Yeah, these markets these days, rentals are going so fast.
Yeah, I don't think anybody's going to have a problem with that.
Yeah, I'd be surprised to find a home that's not rentable. So
Yeah.
it's anything's pretty much renting these days.
Mm-hmm.
There's just a lot of people moving here, so it's a great time to have an investment property. You're going to get those. Probably your vacancy rates are going to be super low, and you're going to get good amount of income for rent. So.
Mm-hmm.
So
Absolutely.
Arturo, there's a lot of stuff that we covered today, and I'm sure people are going to have questions, and I'm sure you're happy to take their questions when they call you.
Absolutely. Call
And-
me anytime.
Okay.
I think was my information up there somewhere.
Go ahead and tell
You
people
call
your
me,
phone number,
email
how to
me.
call you.
Be more than happy to answer any questions. I actually enjoy it. It makes me sharper to answer your questions.
Yes, absolutely. And I know, like I said, I only have professionals on this show, so you can very much guarantee that the people that I have that I'm interviewing on the show are going to be efficient. They're going to take your calls. They're going to answer your questions. And Arturo does a very good job. He does his research. If he doesn't know the answer to a question, he's going to find out
Absolutely.
the answer.
Yeah.
And he's a very amazing lender. I've been working with him since the beginning when I first started my career. So,
remember that.
Yes.
I remember when I first met you.
Yeah,
You were
so
brand new.
I was brand new.
And I look at you. You have your own show.
That's funny. So definitely, if you have questions, you can reach out to Arturo. You can reach out to me. We're definitely happy to help you and get you into making mailbox money, so you can make money in your sleep. Hire a property manager. You don't even have to deal with it. Start making that passive income that can help build wealth for your future.
Absolutely.
Thank you so much for joining us today. I'm your host, Trish Williams. If you're watching our show, please share it with your friends. Take a moment to write a review. Tell us what you think. Tell us what you want to hear. I'm trying to plan future shows, so I definitely want to know feedback from you guys on what you want us to talk about in the future. Thank you so much. You guys have a wonderful week.